Good morning, ladies and gentlemen. Larry Fink is back on the road pumping the orange coin. Michael Dell is tweeting Bitcoin. The orange man has elected a Bitcoiner as VP. Jerome Powell's saying rate cuts are coming. Bitcoin has finished its steep 25% correction. I don't think you're bullish enough. Join us today is CJ Konstantinos. We're going to dive into the Powell or Trump, the US debt clock, China unbanning Bitcoin, Q4 inflation, where we're at, where it will end, Rich Dad's $10 million price prediction. CJ, welcome back onto the show. How are you this morning?
Good day, mate. Thanks for having me.
Always a pleasure to be able to have you on. I think we should just dive straight in to this video. First off, Michael Dell, fascinating hashtag Bitcoin. I think we should dive into the cryptic tweets of Michael Dell of late, but we'll just play this video. It's 2 minutes 43. There's so much going on. Let's get it.
Now, I know you have been a leader in willing to embrace crypto. You have made it so that people can be in Bitcoin. We hear that you are thinking about Ethereum. These are incredible things. Now, BlackRock is not known as a gunslinger by any means. So you obviously must believe that this maybe is an alternative. Is this an alternative in order to be able, because of a deficit, maybe something long-term people should have?
Absolutely. As you know, I was a skeptic.
Yes.
I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did. You had been my thinking. It was like, you don't believe it, so I can't believe it. I want to thank Larry Fink for the message of optimism.
Thanks.
And also for a great quarter. Larry Fink is the co-founder, chairman, and CEO of BlackRock. I think.
So, man, there's so much going on. The biggest two things that stood out for me, Jim Cramer is now bullish on Bitcoin, so I'm not sure if we have hit the top now, if that is the biggest sell signal the market has seen yet. But Larry Fink, he said it's a legitimate financial asset, uncorrelated type returns, a hedge against debasement. But then you invest when frightened. Bitcoin is not hope. That doesn't make any sense because Bitcoin is pure hope. What are your thoughts on that whole video, CJ?
Well, I think first I have to talk about Jim Cramer because as soon as I heard him say something bullish, all the hairs on my back, I'm like, shit. But then I realized he was just kissing Larry Fink's ass. So I don't think he's actually really bullish. He's just sucking up because the guy came and gave him his time. So I feel a little bit more comfortable now. And I think Larry did a great job. He started out really strong, and it kind of went a little bit downhill from there. But I'm really excited to know that he is putting in the hours and he's studying Bitcoin. Most importantly, he's willing to evolve his mindset. It looks like he's starting to realize, I was wrong before and I'm learning more. Yeah, but you got a lot more to learn, Larry, because it went downhill there towards the end when you said, Bitcoin is not hope. And the other thing you said was, if you debasing currencies. You buy it when every government is debasing currencies. There is no government that is not debasing currencies. So it's not like this doesn't apply to a certain group of people in the world because we have a first world system and we're more sophisticated than these people. No, the United States, which is supposed to be the world leader, is printing money like there's no tomorrow. Even the godfather of modern monetary theory recently came out and said the government's spending like a drunken sailor. So, the United States is debasing. That's the problem. The key core currency that everything is pegged to in the entire freaking world is debasing. So Bitcoin is hope right now because we are escaping that debasement. We are escaping that transfer of wealth. We are on the other side of that transfer of wealth. Bitcoin puts you into the position where you can be an asset owner and not a renter. And you can own the asset that's going to be the best performing asset in the world for the entire S-curve adoption, all the way up until the last coins are mined. And you can be the benefactor of the transfer of wealth, which is a loss of purchasing power to bondholders and people who try to save in fiat currencies, with that purchasing power being transferred into asset owners, people in Bitcoin, gold, silver, and even to some extent real estate.
It's pretty interesting. I totally agree with you, CJ, but we have had like a 25.6% correction from the all-time high back down, and then we've pumped up about $5,000 in the last day. That volatility doesn't feel safe for a lot of people. When you are talking to people that are new to Bitcoin, that haven't put in the time to read the books, that haven't done the proof of work, how do you approach that conversation?
Yeah. So I used to approach that conversation much different than I would approach it today, because today I approach that conversation bringing up Bitcoin bonds, just like I commented under Michael Dell's post earlier today. There's just this idea that if you the difference between investing and lending, right? Investing is how you add risk to a portfolio, but of course you get the higher reward. And lending is how you mitigate risk, right? Most people are sitting in US treasuries right now, lending to the US government to collect that 5% APY to mitigate risk and guarantee principal and get a little bit of a reward. But you have to move out the risk curve. You have to invest in the stocks, in other opportunities in order to outpace real inflation. So you get forced out that investment curve. So the natural understanding of finance right now is, hey, if I want to outpace inflation, I need to invest. And the idea of investing comes with, hey, if you invest, you hear this all the time, don't invest money unless you're prepared to lose everything, because an investment is a high risk decision. But what Bitcoin bonds do here at People's Reserve, which we go into beta next month in August, it will be live by the end of the year with our first issuance in 1Q 2025, going to set the world on fire, because now we're taking away this idea of investment. You can now lend into Bitcoin and get the exposure to the best performing asset in the world, to a 10-year CAGR of 60%, to what will continue to be the best performing asset in the world through lending. So the way that, the way the Bitcoin bond works is, let's say you buy $1 million worth, 800,000 goes into US treasuries, a 5-year note at 4.5% or more. And the other 200,000 goes directly into Bitcoin. Well, through the 5 years upon maturation, the $1 million that you lent into the product, that's how much the $800,000 turns into with the 5-year UST note. So that 800,000 matures at a value of $1 million. What's left over is the performance of Bitcoin. If Bitcoin goes down 50% in 5 years, which there's no precedent for that, but let's just say it did, you're talking about 2% APY. If Bitcoin goes up 3x, 5x, you're talking about 8, 12, 20% APY. So I think we have to meet these people in the middle. Not everybody is going to just invest in Bitcoin. There are entities in the marketplace that can only lend, like a money market fund. Money market fund cannot invest. They need to lend their money. So we need to come up with solutions that leverage the number go up technology of Bitcoin and allow lenders within the marketplace to get access and exposure to Bitcoin price performance. So we got to, not everybody needs to invest. There will be tools where you can lend and still get exposure to Bitcoin price performance. And that's going to change the entire landscape, because this idea and this mindset of, if I invest, I can lose everything. Yeah, but with a Bitcoin bond, if Bitcoin goes to zero, it's principal protected. You lose nothing. You invested, you lent $1 million, you got $1 million back. What's left over is the performance of Bitcoin. It's going to change the whole dynamic of how Bitcoin is integrated into portfolios.
That's pretty crazy. Who is it going to be aimed at, the Bitcoin bond? Who will it be open to?
Anybody would be able to buy the Bitcoin bond. The issuer of the Bitcoin bond would be the federal government, a state government, or a corporation. Now, of course, if the federal U.S. government issues the Bitcoin bond, the principal protection risk is zero because the credit risk of U.S. treasuries is zero. They're always going to pay you back. They can just print the money and pay you back. So yes, there's inflation risk. You're going to get paid back, but you don't know what the hell you're going to be able to buy with it, but you're going to get your principal back. So the idea of this is that a private company would issue this first issuance in order to prove the performance of the marketplace through the issuance. And then later on, I think other companies will be interested because these negative yielding debt instruments are just not going to be attractive. These companies are going to be forced to raise their interest rates in order to attract lenders. But the problem is that when interest rates go too high, the company could bankrupt itself. So it actually creates more risk if the rates go too high. But if you allow Bitcoin to do the heavy lifting, if you integrate Bitcoin into your debt issuance, you are now attracting lenders from all over the world who can get exposure to Bitcoin price performance with principal protection. Now, that principal protection does change upon the issuer, right? The US government has zero credit risk. A state or municipality has very low credit risk, and a corporation has medium credit risk. So the lender will have to choose what type of level of risk they want. But the higher the risk, the higher the APY paid on the principal protected note. So the higher, if UST is paying 4.5% or 5%, but a corporation is paying 6%, that extra 6% compounds over those 5 years at a higher rate, which then allows you to put more money into Bitcoin. So the higher Bitcoin allocation equals a higher note yield at the 5-year maturation point. So these are the types of tools that I think, Larry's going to be turning his head and being like, whoa, I don't need to convince this $10 trillion I'm managing anymore to invest in Bitcoin and to swallow that risk. Risk has been completely mitigated. Now, of course, the upside potential is limited too, right? Bitcoin does a 10x. With a Bitcoin bond, you're looking at like 60% APY. But that number is absolutely batshit insane, 60% APY. What is this, like a scam DeFi or something? Like that's a real number with US Treasury principal protection and just letting Bitcoin do the hard work. So I think we have to redefine for some of these big guys right now who are just coming in from this idea and concept where we're forced to invest. We must invest and we must swallow the risk. No, there's coming down the line products and services that mitigate that risk, but still give you the exposure to Bitcoin. And I'm telling you right now, this is not priced into the marketplace.
That's that's crazy. I think we may need to do a whole episode just diving into that. We've got a lot to cover. We've got 34 minutes left, maybe. So on the on that thread in regards to interest rates, inflation, Jerome Powell put out a video on Monday, I believe, saying that rate cuts aren't necessarily going to wait until we get back down to the 2% inflation, even though all their inflation numbers are made up. It looks like a pivot may be happening. We've been calling September on the show for a long time. But I'll play this video, and if you can sort of let us know what subtleties or what he's hinting at here, CJ.
Okay. So the Fed has set a target for inflation of 2%. Now, can you clarify, does that mean that the inflation rate has to be at 2% before you're ready to move, if you are ready to move, or does it have to be within sight? And what does it mean to be within sight?
So when we change interest rates, that tightens financial conditions, and that in turn affects economic outcomes, growth, labor markets, and ultimately inflation, but with lags that can be long and variable, as Milton Friedman famously said. And the implication of that is that if you wait until inflation gets all the way down to 2%, you've probably waited too long, because the tightening that you're doing, or the level of tightness that you have, is still having effects which will probably drive inflation below 2%. So we've been very clear that you wouldn't wait for inflation to get all the way down to 2%. Our test has been for the past quite some time that we wanted to have greater confidence that inflation was moving sustainably down toward our 2% target. And what increases that confidence in that is more good inflation data. And lately here, we have been getting some.
That's interesting. I'm not sure if I really believe in that. Inflation has been coming down, especially here in Australia. Food's still very expensive. Electricity is very expensive. Houses, they're not growing as quick, but their price value is still going up. I know your real estate situation looks a little bit different in certain states. But what do you reckon? Is he just programming? Is he just getting people ready for rate cuts?
Yeah, so a couple of things. I was taking notes there while he was talking because that's actually, believe it or not, that's the first time I've seen that. But what stuck out to me, number one, is he said, "As you tighten conditions." Well, this is actually a false statement because of the level of debt, right? Tightened conditions means that M2 is shrinking, but if you look at the M2 chart, M2 is actually expanding again. And the reason M2 is expanding again is because when you raise interest rates, like they did in 71, and there's no debt, then there's no interest rate debt burden. So you can raise interest rates to 20% because the amount of interest that you need to pay on the very small debt is creates a smaller positive price pressure than the negative price pressure created by demand destruction. But what happened this time around during this hiking cycle is they hiked rates into the largest debt levels we've ever seen in human history. We have $36 trillion of debt. We have $2 to $3 trillion of deficits per year here in the United States. Every single country in the world is running a deficit. In the US, we have $216 trillion of unfunded liabilities. And in the next 2 years, we have $11 trillion of debt that needs to be rolled over from an average of about 3% to where the curve is now, anywhere between 4 and 5%. So tightened conditions means that M2 should be shrinking, and it should be shrinking considerably. So the first part is that's a false statement because we don't have tightened conditions. Raising interest rates for the first time in U.S. history because of the size of the debt burden has actually loosened monetary conditions, because as the interest rates go up, the deficit goes up. And as the deficit goes up, they need to print more dollars in order to finance the deficit. So raising interest rates has actually worked in a counterintuitive way to their economic mindset, because they're just ignoring the value of the debt and the burden of the interest, which has become very clear as U.S. interest rates has become a top line item in the world. Yeah, we're about to get to 35 trillion. What's really scary though is on the bottom right of this thing, you'll see the unfunded liabilities. There they are. It's up to 217. I misspoke. Far right. There it is, 217.2. I thought it was 216. It's going up ridiculous. That's the amount of money that we have promised to spend over the course of the next generation. So you're talking about not just financing the $2 to $3 trillion deficits per year, but the $216 trillion of promised spending over the next generation. There is no way to escape this. And if you raise interest rates on $217 trillion of promised spending, that loosens conditions. That doesn't tighten conditions. The next thing he said is they waited too long. Well, take a look at the unemployment rate. Matter of fact, Sean, you're really good with this. You might be able to pull it up. The unemployment rate has now spiked up considerably. And it's to the extent where if you measure where we are at that level relative to previous unemployment levels, we are now we're in the breakout zone. It'd be like Bitcoin getting back up to the all-time high. Once you break that all-time high, you know you're going to start to go to the next level. Yeah, so we're over 4% now, and the 4% mark, and hopefully Y-Charts gives us a nice visual here. If you draw that line at the 4% level across the chart, what you'll see is that historically, when you I would go. They have that big.
Do you want me to zoom in or zoom out?
Yeah, zoom
We're
out.
looking at the
Zoom out. Yeah,
5
max.
years max.
Try to do max.
Won't let me. No.
Okay, it won't let you. So when you do, because this is not integrating all the data into the chart, what you don't see is that historically, we are now getting to that level. Just like when Bitcoin was at 20,000 in the previous halving, and then she ripped up. It blew up. And right now she's at 70,000. When we break that, it's going to rip to 100. It's going to be an explosive move forward. That's exactly what happens with unemployment. So he's talking about waiting too long. Well, the first problem they did was they inaccurately measured inflation. So when you inaccurately measure inflation, if inflation is 10% and you say it's 3%, that extra 7% that you're lying about, you're actually mistakenly attributing that to economic growth. So that's why everybody's been like, the economy's so strong. The economy's so strong. Yeah, no shit, the economy's strong because you're saying inflation is 3% instead of 10%. So 7% is being attributed to the economy. 7% is making the economy look stronger. If you apply the correct GDP deflator with accurate inflation, the economy is negative. You guys can go see that on govflation.com. I use the 1982 government equation. Nothing of my opinion. It's just their previous equation before they started doing all the substitutions. If you use that inflation rate and you deflate GDP, GDP is negative right now. So it's no surprise that unemployment is starting to spike up. And they're waiting too long because they're looking at the economy saying the economy is strong, we're resistant, we're da-da-da-da-da-da, and they're waiting until something breaks. Well, the economy is actually negative and extremely weak. And that's why I think he's coming out and saying, well, we can't. Before it was like, we got to beat at 2%. Now he's like, well, we're heading in the right direction. And if you look at the CME Fed Watch, what they show is that the marketplace is putting a 90% probability of September rate cuts. So the marketplace is really dictating to Jerome Powell what he should do. And if he goes against that, there could be consequences in the pricing structures of the market. So I think he's going to follow what the market is telling him to do, especially when the rate is as high as 90%. And they should start cutting these rates because, number one, unemployment is getting to that key critical level. If they don't cut rates now and start to support employment, unemployment will have another huge spike like it did in every previous situation where I think the real number is like 4.09%. Once it gets above that threshold, that's when you start to see it go parabolic. And when once it makes that parabolic move, that's what he's talking about. It's too late. If you waited, it's too late because you can't stop that parabolic move. So yeah, we're going to see all of that happen. But what the most interesting thing, which he did not address, is that there is over $5 trillion sitting on the sidelines right now, waiting to be deployed. It's all been waiting to bid. They're sitting in 5%. They're getting cash flow. They're spending the cash flow back into the economy. That's part of the prices not going down and compounding, by the way. So when inflation is lower, unless you have deflation, even if you have lower inflation, the price is still going up because it's compounding. So it doesn't really matter if inflation is only 1% or 2%. If it's 1 or 2%, it means the prices are still going up. They're not going down. So that has a compounding effect, which lowers our quality of life and standard of living. And I think now they've realized, we've pushed this to the brink. And if we don't do something about it, we're going to have to print more money than we did during COVID. And I still think that's going to happen. I still think that what's going to happen from this is that they're going to make the wrong decision. And when something breaks, just like when Silicon Valley Bank broke, they created the Bank Term Funding Program, right? They already proven to us what they're going to do. When something breaks, they'll print over it. And when they print over it, global M2 is going to increase. The best way to protect yourself from the shenanigans is to be in Bitcoin and to understand Bitcoin is not an investment. It's a savings vehicle, and 100% of your savings should be in Bitcoin. Don't think of it as an investment. Understand that it's a technology and it's a savings technology that's going to empower us, we the people who preserve our time and energy, the value of our labor in this vehicle. Get on the receiving side of this transfer of wealth. And the only way to do that is with Bitcoin.
Yeah, I 100% agree. Everyone, learners just joined the conversation this morning. This is the biggest bear out of all of them. Hey, sweetie, darling.
I thought you had dyed his hair orange.
Oh, she's a little darling. It's pretty interesting on that thread, CJ. Like here in Australia, they're saying that the RBA, the Reserve Bank of Australia, our central bank, which is owned by the Commonwealth of Australia, unlike the Fed, but instead of aiming at that 2% inflation rate per year, they should now be looking at the 4% inflation just as their target. And they're saying, oh, this is not going to have much effect for everyone. So like I did a quick maths with some AI. Over 10 years, if you've got 10 grand, you lose about $3,600 roughly in purchasing power. In 10 years, 36% at 4% inflation. So if that's their target, like that's total theft. They haven't managed to get it down to 4%, even though they say their proper numbers are 4%. So then we've got this guy coming into the mix. What an absolute wild weekend. What a photo this guy made. That's the greatest presidential photo in human history. I'm sorry about the circumstance, and I don't mean to be insensitive for the family that lost a soul over the weekend. absolutely horrific. Trump has come out in full support of Bitcoin. It looks like he's just elected or announced his VP, who's a pro-Bitcoiner as well. You're there in the States. I'm here down under, pretty much exactly on the opposite side of the world. So what's the conversations like now in real life? Is Trump actually gaining momentum, or is it just the echo chamber that I live on the internet, on X, where it just seems like he's now talking common sense, backing up the USD or adding Bitcoin on as a treasury reserve asset, making Bitcoin legal tender, getting rid of CBDCs, allowing you to self-custody. Is it really as good as that? Like, is this that hope? Is this the bright orange future? Or is it just gaslighting? And have I just gone down the rabbit hole too far on X?
No, absolutely not. And the first thing I want to address is the shifting inflation rate target, because here in the United States we target 2%. They just pulled that out of the hat. But what they're basically saying is what you said: we're going to steal 2% from you per annum, which is just an absolutely insane concept. But what most people don't understand about that target is how it relates to real interest rates, and then real interest rates affect the long end of the yield curve. So a lot of people think the Federal Reserve might be able to control all interest rates, but in actuality, they only control the front end of the curve. They state the overnight rate, the federal funds rate, and then the short-term rates adjust to that due to arbitrage opportunities. And then the long-term rates, if the Federal Reserve comes out and says we're lowering rates, the overnight rate to 0, the long end of the curve actually doesn't need to adjust. So when you start talking about how the inflation target can start to shift, I think that these people are never going to admit to a shifting inflation target, because that could lead them to lose control of the long end of the yield curve. And if they lose control of the long end of the yield curve, that's an unacceptable proposition. And what that means is they're going to have to do yield curve control. Well, just look at Japan to find out what happens with yield curve control. You have to print a lot of money. And when you have to print all of that currency, you create inflation. So I don't think they're ever going to admit to a moving inflation target. They'll stay steadfast on that 2% target, even though the reality is, since the start of the Federal Reserve Bank, the inflation rate has actually been 4% year over year, not 2%. So they've been off by 100% on that. Now, the second thing is Donald Trump. And here in the States, there's been an absolute shift. I have to say, I was a Trump supporter. I voted for Trump in 2016 and in 2020. And I do feel that the 2020 election was stolen. I feel like a lot of dead people voted. There was a lot of good documentaries that came out about how it's not only the dollar that's being diluted, but also our votes are being diluted. And that's a huge concern to me. But I have to say, through the COVID experience, I did turn a little bit soft on Trump. I liked how he allowed people to make their choices, but I didn't like how much control and power he gave to Fauci. I didn't like Operation Warp Speed, even though he didn't force it on anybody. I just grew soft on him. But me personally, after seeing this assassination attempt, before, if I was in public with friends or family and they said something about Trump, I was at the point where I was just like, yeah, let them say what they're going to say. I'm not going to say anything. I'm not going to defend them. I'm not going to defend Trump. They can have their opinion. But now, if you speak out against Trump, I feel an emotion inside of me that is going to stand up for him. So I think a lot of Americans are now feeling that, because we wanted to try to do it the right way. A lot of people were frustrated with Trump. He went into the swamp. He was supposed to drain the swamp, but instead of being faithful and kind of doing it the hard way, he started playing politics. He started bringing in the names close to him. He started trusting in parts of the system. He thought the system was going to work with him. Well, the system chewed him up and spit him out, and then stole the next election for him, tried to destroy his money, tried to destroy his freedom, and now tried to take his life from him. So I hope when he gets in this time, he's going to realize that he needs to be faithful, and he needs to drain the swamp. And he needs to surround himself with people like JD, who are Bitcoiners, who are not part of the system, like Vivek, like all these people who are going to be outside of the system. You cannot use the system to reform the system. We need to bring in new people. And you need to do, Mr. Trump, what you said in 2016. You need to put Hillary in jail. You need to start not allowing the system to be used against yourself. And this was a big moment in time. I remember my son had his 3-year-old birthday party on Saturday, so I wasn't really looking at my phone. nothing came on the TV because it's complete propaganda. They, if you looked on TV, Trump fell. Trump tripped on stage because of loud noises.
Yeah.
What? It was an assassination attempt. He got shot in the ear. This is
just on that really quickly. Our Prime Minister here in Australia came out, like obviously the news, the truth was put out all over X, but the Prime Minister of Australia came out and said, hey, we don't know what's going on. They did know what was going on. You need to make sure that you're getting your news from verifiable sources, mainstream media. And mainstream media was feeding up lies, total BS for people, totally just misguiding people, leading them away. It is good to see. And I'm actually afraid to read the article. I actually don't want to, because a lot of this is just propaganda. But the photo is what I got the paper for.
Epic photo.
Like from the top person in Australia, when the truth is clear, plain and daylight, and they're like, no, you need to trust us, who have led us wrong for the last 4 years. Very easy to see. It's been going on for a lot longer. It's crazy. So if Trump does get in, and from here, I believe he's going to get in if he stays alive. He has to get there first, and I probably don't think this is going to be the last time. Whether it's the deep state, a Lone Ranger or whatever, I don't know. I'm so far removed from it, but we just need to get him there. If people can offer support, help him out in any way. I think if for some reason he doesn't get in, then it's World War III, then it's total chaos, then the inflation, the destruction of people's purchasing power, CBDCs, digital IDs, 100% control. And I don't mean to be fear-mongering. Maybe that doesn't happen. Let's hope that doesn't happen, but there's probably an opportunity right now to prevent it.
That is not fear-mongering, because, the night of the assassination, pretty much all public websites that sell ammo crashed. So I actually tweeted out Jason Williams' post where he said we were 0.05 inches from a civil war. So I think what the rest of the world doesn't understand, because everybody's in their own little fish tank, right? Even me here in the United States, I'm in the USA fish tank. I don't know what life is like in France or in Britain. I've visited, but I don't know what it's like to live there and deal with the politics, or in Australia. And everybody around the rest of the world is in their little fish tank looking at the United States, thinking that everything is okay. We were 0.05 inches away from a civil war. And what people need to understand about this, and I tweeted this, I said, what was so interesting about the first U.S. Civil War? The first thing that happened was the 11 Confederate states issued their own fiat debt note currency. And it was called the Montgomery issue. That was the first thing that happened, because the economy could not operate dependent upon the Treasury and dependent upon banking partnerships with people that they were at war with. So the first thing that happened was they launched their own. Well, if God forbid in the United States, if the Bible Belt, like Texas, Louisiana, Florida, Alabama, if we seceded from the United States, who would control the Treasury? And then, what if the Democrats said, no, we have the legal right over the Treasury? What if the conservatives said, no, we have the legal right over the Treasury? Who actually has the legal right over the Treasury? Who's going to make the interest payments on the debt? And who's going to roll the debt over and reissue? Who's going to control that process? If I was holding U.S. Treasuries right now, I'm not only concerned about the inflation risk. Yeah, I know I'm going to get my money, but I don't know what the hell I'm going to be able to buy. I'm not only concerned about the overreach risk, like Russia having all of their reserves confiscated and then given to their enemy to use against them. Now I'm worried about the civil war risk. Now I'm worried about, if something happens in this country, what if the conservatives say it was the crazy liberals who spent all that money? And then what if the liberals say it was the crazy conservatives who spent all that money, and nobody wants to take ownership of the debt? And these two separate entities, these two new governments, start issuing new debt notes based on their new governments. That risk is not priced into U.S. Treasuries, and ultimately what that is that's a yield curve steepener. That's going to lead to interest rates going higher, which would then require yield curve control, or else this thing's going to really get out of control really fast. So what's going on with Trump saying that Bitcoin is a strategic reserve asset, coming out and saying, if I'm president, I'm going to back the dollar with Bitcoin, and perhaps Bitcoin bonds is one way to do that. I'd love to maybe even dive into how that could fix Social Security, because the government could issue the bond, take the Social Security tax and buy the bond. And instead of Social Security holding a bunch of notes and bonds in the US government that are negative yielding in real terms, and Social Security continues to shrink and they have to keep raising the full retirement age and lowering the benefits in real terms, you can hold Bitcoin bonds, which are going to yield 20, 30, 40% APY. You could recapitalize Social Security with Bitcoin bonds. You could recapitalize the Republic with Bitcoin bonds. And you could do that. You don't necessarily need to back the dollar with Bitcoin like we did with gold. So I think Trump is starting to learn these things. And you know what? Shots weren't fired until he made that statement. I think the people he was talking about when he said they hate Bitcoin, they're afraid of Bitcoin, I'll back it with the dollar. Who's the they? The they is the same people who assassinated Abraham Lincoln when he tried to reform the banking system going into the Civil War. It was a big opportunity to reform the system and give the Treasury more control. They killed him. What did JFK do? He issued silver certificates that allowed the Treasury to issue dollars without interest. We could create dollars without owing interest to the central bank. What did they do? They killed him. Donald Trump came out and said, I'm going to back the dollar with Bitcoin. What did they do? They fired shots at him. And I personally believe that bullet was deflected by an angel. Call it whatever you want to say, but that man's not supposed to be dead. He's supposed to be alive because he's called to a purpose. And I think that purpose is a new wave of patriotism in the United States, where the silent minority no longer is construed as the majority. And these crazy people, boys who think they're girls and girls who think they're boys, who are attacking our children, these people need to sit down and shut up. You can do what you want to do. It's not going to bother us, but you go do it in your closet. You don't bring it to our kids. There's going to be a new wave of patriotism in the United States. And it's all built around what just happened this weekend. This is a weekend that you and I and our children and grandchildren will remember for the rest of their life, because we're accelerating. We're moving into a point of acceleration. And we're passing the point here in the United States where conservatives, where the bad rap that we have is that we wait. But what we're learning now is these people, dictators, they don't negotiate. They murder you. They meet threats with violence, not with negotiation. What's Trump fantastic at? Negotiating. He wrote The Art of the Deal. He's a professional negotiator. These people are tyrants. These people are the real dictators, the real Hitlers of the situation, where if you don't agree with them and the popular opinion is with you instead of them, they'll just kill you. And now that's the shot they took after Trump made those statements about Bitcoin. I think Americans are going to wake up a lot faster. Just like COVID was an acceleration, this is another one of those acceleration moments. And that means that's going to be good for Orange Man and Orange Coin.
Yeah, 100%. There was a gentleman in the chat. I just can't see his comment anymore, but he was saying that we're in an echo chamber. And maybe we both are, but I tend to believe that we're not, and I agree with what you're just saying. CJ, we've got about 16 more minutes, and I want to dive into where Bitcoin can go sort of over the next 12 months for the cycle. Before we do, I want to give a massive shout out to my sponsor here on the channel, The Bitcoin Way. 25 years cybersecurity experience. Tony used to work for Steve Jobs, very intelligent man. I will be filming another podcast with him tomorrow afternoon. The reason I bring it up today on this show, my logo will be up there shortly. We're just going back and forth with that. But step number 3, so step number 1, secure the Bitcoin, self-custody, air-gapped, run a node, become your own bank, sovereign, get the money right. That's your security. That's your hope. That's your freedom. Protect your devices. But number 3, with everything going on, if you need a second citizenship, if you need to go somewhere that's more tax-friendly, it's a cheap, easy way to be able to do it. It's legit. The first 30 minutes is free. Reach out to the team, Tony, today, link at the top of the description. And every day I'm going to bring these people up. They're really doing the Lord's work, as everyone is that's really advocating for Bitcoin. Total shift gears, just because we've got so little time. We're going to have to get you back on so soon. And for everyone watching, if you can smash the like button, follow CJ on X. Do you still have your YouTube channel going?
Yes. Yeah.
Cool.
It's same handle at CJ Konstantinos.
Check that out. I've watched a lot of those videos. I haven't seen them for a while, obviously so busy, but I last time we went through, I watched all the videos that were on there. It was absolutely epic. CJ, just pure signal. But Rich Dad Poor Dad, he's coming out with $10 million price predictions. And for everyone, I don't think we're going to get $10 million this cycle, like in the next 12 months. That's my belief. It's possible. The probability of it happening, I don't think so. I think $1 million is 100% definite. In time, also, I don't know about this cycle, but it is very possible if they fire up the money printer, if things get crazy. But in regards to price predictions, for me, I don't think about the next 12 months. I don't even think about the next 4 years. I'm starting to look out like 2030, 2034 and beyond. But maybe, CJ, if you want to dive into what you think can happen this cycle, just your ideas around it, and then going out to like the 2030s, 2034.
Yeah, absolutely. So if you guys don't already follow Bitcoin Fair Value, which is just at BFV Fair Value, that's what you should do, because it was a long time ago that I got worked through the washing machine, right? We all get into Bitcoin thinking we're going to be master traders and make a whole bunch of money. And, you know, I've been wrecked. I've been liquidated. I had to learn the hard way. But what I did was that led me to create my own algorithm. And this algorithm is actually used for the mining perspective in order for miners to manage their treasury. And what it does is it determines a Bitcoin fair value based on the economics of Bitcoin. So right now, Bitcoin fair value is actually at $300,000. So Bitcoin is trading at a significant discount. And what's so interesting about Bitcoin and the type of analysis that I do, because I do what's called cost structure analysis, and cost structure analysis is a, I would say it's a more economics-based valuation model versus, technical analysis where you don't see where these prices can go. Because here's how it would work. Like, let's say the price of Bitcoin does go to 10 million, but the cost to produce Bitcoin for the largest miners in the world is like $100,000. Well, what's happening is that there's a premium to the cost of production that's so large that it's going to create significant amounts of sell pressure. And then that sell pressure allows, Satoshi said it like this, the price of a commodity always trends towards its cost of production. You can go look at my highlights on my Twitter account. You'll see that quote from Satoshi. He taught this. So it's not my opinion. I learned it from him and integrated it into my algorithm. And it's a natural law of economics, just like gold. If the price of gold went up, but the cost to produce and rip the gold out of the ground stayed relatively the same, then what would happen is they'd start producing more gold because the profitability of mining the gold would go up, so they could allocate more resources to ripping the gold out of the ground. But with Bitcoin, as you all know, as the price goes up and the profitability increases, they cannot create more Bitcoin. But what can they create? Hash rate. And then is there a mechanism within Bitcoin that calibrates all of this stuff? You know, in the opening, you talked about power law. There's a power law relationship between hash rate and price. Why? Because as the price goes up and profitability increases, miners reinvest that profit in hash rate. You can't increase the supply, so they reinvest it in hash rate. As hash rate goes up, the difficulty adjustment goes up, right? Because hash rate goes up, blocks get found in quicker than 10-minute block times. The difficulty adjustment job is to target 10-minute block times. So as hash rate goes up and block times drop, the next difficulty adjustment, which happens every 2016 blocks or roughly every 2 weeks, is going to adjust upwards. Well, when the difficulty adjusts upwards, the cost of production goes upwards. So the engineered genius of Bitcoin is that it's the only commodity in the world that can raise its own floor price. Gold cannot increase its cost of production. No other commodity in the world can increase its cost of production. Bitcoin, it was strategically designed to store value through us long after all these hyperinflated fiat currencies are gone. This economic concept still applies when Bitcoin is just a straight derivative of energy power. And what happens is the difficulty adjustment goes up. That drives the cost towards the price. That's how we keep getting higher lows, right? Everybody gets excited about the peaks. Oh, we went to 3,000 and we went to 20,000. We went to 70,000. You know what I get more excited about? The lows, the higher lows, because that's the definition of store of value. And it's Bitcoin's strategic design. It's engineered money. It's actually the first form of money that we've ever found, because it's absolute digital scarcity guaranteed. So it's the first pure form of money we found. On top of it, It drives value through the production and commodity cycle process. I've never seen anything like it. I don't think Fink has any. I don't think the whole world has ever seen anything like it.
Well, we've never had anything like it. It's never existed. This is the most unique time in human history, bar none.
Absolutely, and that opportunity. That's what the opportunity is right now. It's like when the horse and buggy came out versus the car. They have this fantastic picture of the horse and buggy. There's all horses and buggy and one car. 3 years later, they take a picture from the same angle. It's all cars and one horse and buggy. At some point in time here in the future, Bitcoin's going to move away from its commodity value, which is a commodity cycle based on cost of production, and it's going to be moving to its monetary value. And the monetary value is where that meme comes from, infinity divided by 21 million. Actually, it's global GDP divided by 21 million. But the intuition, the creativity of humanity is limitless. So that's where the infinity comes from, because global GDP truly is limitless, depending on how humans can produce and what we can invent and how we can become more efficient. So the limitless effort of humanity and production of humanity creates the infinity divided by 21 million. And ultimately, 5 million, 10 million, 1 billion. No, it's global GDP divided by 21 million. And then until we get to the top of that S curve of adoption, which also is going to integrate medium of exchange. We're talking about Bitcoin based off of store of value. It's not even a medium of exchange yet. Think about gold. Gold was a store of value. You know what it needed? It needed an L2 scalability. Enter paper derivatives and bank deposits. L2, paper derivatives and bank deposits allowed gold to move from a store of value to a medium of exchange. Once it was the most widely used medium of exchange, it then became a unit of account. So Bitcoin right now is just being valued off the fact that it's a store of value. What's coming down the line is it becomes a medium of exchange. And after that, the global unit of account. So 10 million, why so bearish? In the long run, it's infinity divided by 21 million.
Send it. We've got a couple of minutes left. I just want to rapid fire, and I'm sorry that this is an S coiner, even though they've got Bitcoin in their name, but I will use their tweet and bring it up. Bitcoin LFG. I like the name. I don't like all their posts that they're putting out there. Anyway, that aside, big breaking. China is likely to unban Bitcoin Q4 2024 reports. Trust me, bro. Trust the source. It's very unsubstantiated, but they pretty much killed the cycle last time with their Bitcoin mining. That was part of the reason. If China was to come back in, there's also more rumors that mainland China is looking to launch a spot Bitcoin ETF. Rumors, source, absolutely nowhere. X, that's my source, bro. So I wouldn't take that for more than a grain of salt. But if they were to come into the mix, with Larry Fink coming into the mix, Michael Dell, just billionaires the world over, nation states, countries, companies, all coming into the mix. But China, the second largest superpower in the world, how's that changed the game?
Yeah, I don't think China is going to do a homeland ETF. I don't see that happening, because look at what China is, the model for the New World Order. They have over 700 million CCTV cameras. They're issuing credit scores based on social behavior. If you want to know what a central bank digital currency is going to look like, just look at China. They're not going to do that now. But what's really interesting about this is there's still actually quite a bit of hash rate that originates in China. And the reason for that is because the Chinese have discovered what Trump recently discovered when he met with Bitcoin miners. And what Trump discovered by being taught by these miners and being open-minded is that Bitcoin actually secures the electric grid. Bitcoin increases the bottom lines of these electric companies, which allows for reinvestment into the grid. So the U.S. infrastructure is crumbling. It's a national security risk. And here comes Bitcoin increasing the bottom lines of these electric companies, of these utility companies, to reinvest in the infrastructure. And now China's starting to understand that too. Bitcoin is an economic incentive that, when properly applied, think of all the energy they have in China, all the dam energy, all of this wasted energy. And I say wasted because they produce massive amounts of energy, but they don't use it all. So if they could capture that energy that's being produced but not being used, and they could monetize it in the form of Bitcoin, they can then take that profit and reinvest it into their infrastructure. So what I think China is really starting to understand is we don't want a mainland ETF. We don't want our people waking up. But what we do want is our utilities to integrate Bitcoin mining, because what that does is it supports the infrastructure and growth of our grid and the ability to expand in the long run. So this is like global game theory. This is talk about superpower 1, superpower 2. Bitcoin is actually forcing China to unban Bitcoin mining. And it might be one of those things where it's like not anybody can just do it, but certain companies are legally allowed to do it, kind of like it is now, which is why there's still a good portion of hash rate coming from China. But it's going to be integrated into these energy companies, utility companies, in order to increase the bottom line, because that added economic benefit is then reinvested into the homeland. And that's going to be true for the United States and China. And ultimately what that means is higher hash rate. Higher hash rate means higher difficulty. Higher difficulty means higher cost. Higher cost means higher fair value. That's number go up technology.
Fix the money, fix the world. I think that is just such a beautiful way. CJ, we need to get you back on. We need to go deeper. We need to go longer. I've got another podcast in 15 minutes, unfortunately. But for everyone watching live, watching the replay, hit subscribe if you've vibed. Follow CJ. I'll link his YouTube. His X is already there in the description. Mate, you're a legend. I love what you do. The signal that you send, the passion, the conviction that you have. I can tell you're definitely not one of the bears. It's number go up, and it's been a real pleasure this morning. But I'm going to pull your full screen, final thoughts, and then we'll get out of here. Hey.
Well, thank you so much for having me. I love what you're doing. It's so important to teach people and to be confident in what you know, right? We're not being confident in something like we're just being speculative here. I've been in Bitcoin for 11 years. This has changed my life. This is a life-changing opportunity. And if you're out there sitting on the sidelines, listening to mainstream media, or you have family and friends who aren't really piecing it together, you have to start to let them understand that Bitcoin is actually a savings technology. It's not an investment. Drop the investment mantra and start to teach out of love that this is a technology that's designed to empower you, just like the internet has empowered companies and people and the global economy. Bitcoin is the base layer money of that internet economy, and it can empower you. And if people can start to understand they're not making a risky investment, they're making a smart savings choice, then I think that the fight that we are going to have to continue to fight into the future is going to be a lot easier, because people are going to be seeing Bitcoin as a friend, as a benefit to their family and to their quality of life and standard of living, versus a risky investment where they might get lucky and have some extra fiat junk dollars to spend. So stay out there, fight the good fight, dish out your Bitcoin orange pills, because we are accelerating. And there is no doubt in my mind, at least here in the United States, that things are going to continue to accelerate at a faster and faster path, especially when rates come down. All of that sideline money is going to be coming rushing back into assets. And the fastest horse in the race is Bitcoin. Don't miss this train, because it's leaving soon.
One big ask for everyone, either my videos or CJ's videos, find a video that you like, that you resonate with. Maybe it's this video today. Share it with someone that hasn't gotten the orange pill yet. It's not like you're selling them something. You're literally giving them hope, financial freedom, power to take control of their own lives. There is nothing more important that they should pay attention to. Whether they buy Bitcoin or not, that's on them. But if they fail to understand and study Bitcoin right now, that's the biggest mistake they're going to make of their lives. So while everyone here understands what this thing is, please help share that orange pill. There is nothing more important right now. I appreciate everyone. Do something nice for yourself, for somebody else out there, by sharing some Bitcoin signal. CJ, it's an absolute pleasure. Be blessed. Peace.
Thank you.